Hey guys, hope everything's going well. Alrighty, today I wanted to touch base on the stock market and why I'm bullish on the stock market for the remainder of the year. I'm not sure if we've hit a bottom. However, the fact that the Russia-Ukraine news is probably fading away, I think that's good for the markets. Obviously, no geopolitical tension. That should be decent for the markets. And also, you see oil prices rise. And even though I believe we're going to have over $100 a barrel of oil sometime in the near future, within the next year or so, I believe we're going to be in corrective mode right now. And I saw oil the last few days has taken a breather, and I want it to frankly take more of a breather before maybe I go long in oil. And once again, if you're watching this video, this is just my own opinion. So if you're making any investment or trading decision, make sure to do your own due diligence or go seek a financial advisor if you're doing more of the long term thing. Anyways, so what's probably going to happen in regards to the economy, it's going to happen in the next few weeks. You're going to see all these states get rid of their mask mandates, maybe except on a train or if they're in a nursing home or in a hospital. And it appears that things will somewhat get back to normal. After March, or it was maybe April or May or last year, they got rid of these mandates temporarily, not the mask mandates, but they got rid of some of these mandates. So things started to get back to normal, and that was good for the economy. That was bad for the sports card market. But I'm not talking about sports cards here. I talk about that in my other channel, AIH Sports, if you're interested. And right now, if the economy opens back up, you have to look at the fact that, okay, that will definitely help the economy, in my opinion, and that will help corporate earnings. And because of that, I want to be long the S&P 500. And the other important thing that I'm looking at, just from a shorter term perspective, the short term Fed funds rate is what, zero? It's going to go up this year, in my opinion. And the 10-year yield is what, a little over 2%. That's an upward sloping yield curve. That is bullish for the stock market. Now, some people may say, hey, the credit spreads are very narrow, the fives and the tens, or the fives and the sevens, seven versus 10. Yeah, that is definitely true. But at the end of the day, we're not looking for a contraction in the economy, in my opinion, for maybe the next year and a half, 2 years. Now, I talk about the Eurodollar futures market, how those yields are inverting. And I look at it every day. Right now, December 2023, that's when they're pricing in some issues in the market. That doesn't mean the stock market's going to crash by then. It just means that traders for a year and a half from December 2023 to about June 2025, as of right now, they're pricing in what probably is going to be what the mainstream economists call as deflation. Now, as we get closer to that, we'll be able to see what's going on. But right now, yes, definitely, I am bullish for 2022. Should be a good year. The challenges, what we're going to have, though, is high oil prices, high inflation, not a good thing short term. Long term, the markets are actually not pricing in high inflation because if you look at the 10-year yield, it's 2%. If you saw higher inflation, those yields would be much higher. If they saw more inflation this decade, they'd be more higher. 5-year yield, it is what, close to 2% as well? That's not that much. So you're just looking at these yields. The market's not pricing in inflation long term. Short term, yes, there's definitely inflationary pressures. And I've talked about that numerous times. But like I said, we don't have oil prices at 130, $140 a barrel. I think we'll probably get there in the next year, year and a half, whatever the time frame is. And that's going to lead to an oil shock, and that's going to be bad for the economy. But we're not there yet, and because we're not there yet, the economy should be good. And we're not at an inverted yield curve. Once the yield curve inverts, once the Fed funds rate exceeds the 10-year, I don't want to be in this economy. I don't want to be in the stock market. I probably will be looking for stocks to short. And I'm going to be putting up a list, and I'm going to be going from there. All right, guys, let me know what you think. Smash that like button, subscribe if you haven't. Comment down below, guys. Thanks. Bye.